So now I'm going to do the essay problem because uh, the remaining short questions, that is the second one wherein we need to calculate the claims, third one it is about calculation of the commission, fourth one it's about the operating expenses. So I hope you will be able to do these short questions by yourself, because as you're almost used to um, like treat the following adjustments which have been given over here. So I'm not wasting time in this. I'm quickly moving ahead with the long answers, and here let us go with the second long question. Okay, I'm not doing the first one, I'm doing the second one. The first one I will be explaining it to you later. So here what is asking, from the following particulars of Sada Safe Insurance Company Limited on 31st of March 2016, prepare the revenue account in respect of the fire insurance business, right? So here let me let's move the Excel sheet. So here, let us quickly have a recap of the revenue account. That is, under the revenue account of the general insurance companies, we are going to show only the premiums which have been earned by the company, followed by the income from the investments, then the other income. So in this, the one income which is not being shown as per the LIC is the consideration for the annuities granted. Then followed by the expenses here. So here the expenses are being classified into three different groups. That is the claims, commission, followed by the operating expenses. So claims, as per 2, commission 3, operating expenses 4, and the difference between the income and the expenses here we call it as operating profit or a loss, right? And this is about doing the problem. So let us. Okay. Now, so let's go to the second one. So here, as the revenue account has to be prepared ended, that is 31st of 2016, right? And here we also need to have one more amount column. Right. And if you want, you can also mention the name of company. That is Sada Safe Insurance Company. Now the first item here given under the balances is, because As you can see that there are no adjustments, but there is only an information towards how much is the reserve which is required, okay, for the current year towards the unexpired risk. So here 50% is, as usual, it is a normal reserve which is to be kept, and followed by there is also an additional reserve which is required, okay, of rupees 1,50,000. So obviously we are going to make an adjustment. We'll see while doing the problem. So first let us go with the premium. So here we have the premium. So followed by there is a reinsurance premium towards the same. So here the reinsurance premium is deducted. So the reinsurance premium over here is at 12,500. So if you are deducting the reinsurance premium of 1,12,500 from 16 lakhs 80 thousands, the balance of the premiums amount here is 15 lakhs, it is 67,000 So here then we also have the reinsurance recoveries. So whenever they just give it as the reinsurance recoveries, right. The amount of the reinsurance recoveries can be deducted from the claims, as if we are going to receive it from the other companies, as the amount has to be recovered from the others. So therefore here, as we still do not know what is the amount of the amount of the claims here. So first let us take the amount of the claims, that is 9 lakhs 60,000, that is 9 lakhs 60,000. Then followed by here you can take this as, right, less, right. So here the reinsurance recoveries is, and there's one more alternative for this is, you can show this also under incomes, other incomes, okay. So after adding this, the balance of the claims here is going to be 9 lakhs 90,000. I'm sorry, it is to be deducted, not to be added. One minute. Right. And next, we have outstanding claims as on 1/4/2005. So we very well have the claims amount here. So that is, outstanding claims as on 1st of April 2015 is 97,000 500. So once you minus, now from 9 lakhs 30,000, if you are deducting 97,000 500, the balance of the claims here is going to be 8 lakhs. It is going to be 8 lakhs 32,000 500, right. The next we have the outstanding claims at the end of the year. I'm not going with the detailed explanation of all this because it is already done in life insurance companies. Okay. So the outstanding claims at the end of the year is supposed to be added. So 1,35,000 to be added to the above claims or above balance of the claims. So after adding 1,35,000, the amount of the claims over here is 9,67,500, right. Then we have the reserve which is being provided in the last year. So we can also call this as the old reserve. So usual reserve in the last year is old reserve, I'm just putting it as. So the usual reserve in the last year is 1,50,000. See, we are at convenience because we have the format, and as per the format we are just keeping everything in place. But when you are doing it in your examination or while writing down the same thing in the notebook, you may find it very difficult because you will not have everything ready. isn't it? So wherever and whichever place, whatever the amount which are posting, okay, should go accordingly. So here the usual reserve, then followed by the additional reserve which is been provided in the last year is 1,50,000, and whereas the usual reserve over here is 7,50,000. How much did I took? I've taken it as, okay. So let us bring this down. Yeah. So this is going to be 7,50,000, right? So this is the old reserve, children. So we are nothing to do right now with this reserve. Leave it aside. Then we have the expenses of the management. So expenses of the management is to be taken under operating. So the total amount of the expenses of the management over here is, it is 97,500. But out of that he says, okay, um, that 45,000 is being spent towards the legal expenses with respect to the claims amount. So if there is anything to be spent towards the claims, we usually add it to the claims. We are not going to take them separately as operating expenses. So therefore minus legal expenses from this, that is 45,000. So once you minus this 45,000 from here, the balance of the claims is going to be, right, 52,500. So 52,500, and therefore this part of the legal expenses, okay, should be added to the claims itself. So add legal, you know expenses. Legal expenses over here is 45,000. Okay. Then next year we have the interest, dividends, and the rents, which is gross. So here the amount of the interest, dividends, and the rents should be taken. Schedule number 1. So here I'm just putting it as the amount of the interest, dividends, and the rents given is 9,750. 1 minute. Again, I think there is a small mistake which took place towards, very very difficult on the PDF. So operating expenses is 7,500, but it is 4,20,000. The amount is given on the top. So from 4,20,000, if you are deducting 45,000 towards this, the balance of the operating expenses is 3,500, and then coming to the interest and the rents, which is from the investments. So whenever you are taking the interest, dividends, it should be always to be taken at gross value. So already they gave us the gross. So therefore the given amount of, I think immediately after that we have the income tax on the above. So here the income tax on the above will not be considered. Okay. In case if the given amount of the interest or the dividends are net, then you can add back the income tax. So ignore the given amount of the income tax. Now going to the next item, that is the commission. So here the amount of the commission given is 2,28,000. So therefore as no adjustments towards the commission, I'm showing it directly in the revenue account itself. So 2,28,000 per commission. Then we have the profit on sale of the investments. So either you can mention it directly here, profit on sale of the investments, because we have seen it in the format itself. But instead of that, okay, I'm just putting it under income from investments itself, because it is related to the investments. So that is 16,500. Okay. And at the end of the year, as I say that a usual reserve of 50% plus an additional reserve of 1,50,000 is required to be provided. So let's just see how are we going to make this adjustment. So first, coming to the total amount of the premiums. So here we have the premiums, that is a net premium available over here is 15 lakhs 67,000. 67,000. This is what we call it as as a net premium. Then next here we have this. Now the reserve. So how much is the reserve is required now? The 50% of the premium amount. So here the premium is 15 lakhs 67,500. Okay. So 15 lakhs is 15 lakhs 67,500 into the 50%. So this 50% here is coming up to 7 lakhs 83,000 750, and also as I said, an additional reserve of 1,50,000 is required to be maintained. So let us also add 1,50,000 towards the additional reserve. So after adding 1,50,000 additional reserve, the total amount of the reserve, okay, which is required for the year is 9,33,000 750. Okay, and whereas if you are making a comparison of this amount with the old reserve, so old reserve is how much? They have already provided 7,50,000 plus an additional reserve of 1,50,000. So therefore, the total amount of the reserve over here is 9 lakhs of rupees, isn't it? So here it is going to be 9 lakhs. So now what is it we are going to do? We are making a comparison. So how much is the amount? So I'm just taking this amount to the outer column. Outer column. Which is more? The new is more or the old is more? And the new is more or the old is more? Hello?
New.
Ah. So if the new is more, what is that we are going to do? We are going to minus it. So how much we are going to deduct now? As the new reserve is more by 33,000, 750 from the old reserve. So we are making it as a deduction. So deduction means let us take it under the brackets. Went off. Okay. So 33 minus value. So if you are deducting it from 15 lakhs 67,500 minus 33,750, the premium earned will be 15 lakhs 33,000 750. This amount of the premium will be taken to the revenue account. Okay, so here 15 lakhs, it is 33,000. Then we have income from investments. The total after adding the profit is 1,14,000. So let me write it down, 1,14,000. For other income, and the claims here will be, that is after adding the legal expenses, the claims is 10 lakhs 12,000, 10 lakhs 12,500. Then we have an operating expenses of 3 lakhs 75,000. That's 75,000, right? So now show the totals. So take the total. Okay, so from A, total, that is incomes minus expenses, that is 16 lakhs 47,750 minus 13 lakhs 87,500. We get the difference, that is the profit as 2 lakhs 60,250. 20. I think so. Somewhere it just went wrong. Wait for a minute. Just give me a minute. Let me check the totals once again, because it's not matching with the answer. This is also right. Doesn't matter. This is also right. This is also right. This is also right. Okay, so here there is a mistake in the total of expenses. So just let me check it manually once. 10 lakhs 12,500 plus 2,28,000 plus 3,75,000. Yeah, it is 16 lakhs 15,500. Minus 16 lakhs 47. 32. Got it. The income is more than the expenses, right? It as a profit, and here the profit is 32,250. You can also see the bill. But not taken properly. So it is 32,250. Clear? Any doubts on this? Clear, children?
Yes, ma'am.
Yeah, 1 minute. I would like to, because Monday we don't have a class, so let us finish off one more problem. Share this Excel sheet with you all, and in this already I have made 2 solutions, that is problem number 1 as well as another problem number 3. Okay, so just go through the solutions. I think the third one can be a fourth one. Let me just have a look. Okay, what I'll do is, the fourth problem is very simple. I'm just going to explain it to you all. So complete the fourth one. So 1, 2, 3 and 4, and fifth one, if you can just spare 10 more minutes, I will be able to complete even the fifth problem as well. So just have a look into the fourth one. From the following particulars, you are required to prepare fire revenue account for the year ended 31st of December 2016. So claims have been paid, and they have also given you. So this is a calendar year which they are following, children, which starts from 1st of Jan and ends on 31st of December. Okay. So the claims paid, from this minus the outstanding claims at the beginning of the year, then add the claims, okay, at the end of the year. And there is also still claims which have been intimated, accepted, but still not paid. So this is also to be called as outstanding at the end of the year. So add back even 30,000 also. So 20,000 plus 60,000. Okay. Then followed by the premiums have been received here. So we have the premium ceded as well as premiums accepted. So minus premium ceded, that is reinsurance ceded. Then add reinsurance premium accepted. Okay, then you get the amount of the premiums which have been net. So on that net, then as usual you are going to make a reserve towards the unexpired risk. Then there is medical expenses of management, and there is also medical expenses. So expenses of management followed by the medical expenses should be taken under operating expenses, because the medical expenses whatever is being given, they did not say that it is with regard to claims. So when nothing is being mentioned, it is an operating. If they say with regard to claims, okay, that or with respect to claims or whatever it is, then you are going to add this to the claims amount. Okay. Then commission, then followed by we have reinsurance commission ceded and reinsurance commission accepted. So you pretty well know like what is to be done towards this to find out the amount of the commission to be charged to the revenue account. Then here we have the reserve which is being provided, okay, in the last year is 4 lakhs of rupees, and an additional reserve also made is 20,000 rupees. So what is asking again, you are required to provide for additional reserve for the unexpired. So he is talking about only the additional reserve. So additional reserve information, if at all they provide, we are going to do it accordingly. If nothing is being given towards the additional reserve, then we will never provide any additional reserve. That's one thing. So usual reserve, and as it is, we are going to take it as 50% of the net premium. Okay. So here you are required to provide for additional reserve of for the unexpired risk at 1% of the net premium in addition to the opening balance itself. So whenever it is being given as in addition to the opening balance, that means in addition to this 20,000 rupees, okay, you are going to calculate 1% of the net premium amount, and whatever the amount you get, you are going to add to this 20,000, and that will be taken as closing additional reserve. Because in the opening we already have, that is the old, we already have 4 lakhs plus 20,000, 4 lakhs 20,000 is the old reserve. And what is going to be the new? The new depends upon how much will be the net premium. So accordingly you are going to calculate 50%, and then you are also going to calculate additional reserve of 1% in addition to this 20,000. Like one of the short questions which we have done, let me also share that. Yeah, here. So here, in addition to, he said no, in this problem also it was being given as in addition to the opening balance. So the opening balance of the reserve here was 25,000 plus 1% of the net premium we have taken, which has come up to 3,200. So similar to this, for this problem also, for the fourth one also, you are going to take first 20,000 plus whatever you get 1% of the net premium. So then it will become, the total will become the new reserve. Then compare with the old one, whichever is more, accordingly either you add or you minus. Okay. Then finally find out what is going to be either the operating profit or the operating loss. So till here we have completed 1, 2, 3, 4, and fifth problem also can be taken as a homework, because there is nothing new in this problem. If you want me to explain, I will just give an explanation and I will stop it here, because sixth one, yeah, I have to do the sixth problem by myself. Okay, so shall I explain the fifth problem also? Will you be taking this as a homework? Give it a try. Yes, children?
Yes, ma'am.
Okay, so I'm just going to explain this. Pay attention now. So on 31st of March 2016, the books of Good Luck Insurance Company Limited contained the following particulars in respect of fire insurance business carried on by them. Okay, so here we have the claims which have been paid. Okay, I'm not telling you like where exactly you're going to show the amount of the claims. You want me to say it again? Yeah. So if you want to take the amount of the claims, okay, I'm just sharing the format here. So the claims will be taken into schedule number 2, right? Then outstanding claims at the beginning of the year, that is 1st of April 2015, has to be deducted from the given claims paid amount. Then claims intimated but not paid, which is also called as outstanding at the end of the year, that is as on 31st of March 2016, should be added to the balance of the claims amount. Okay, so this is about the claims. So claims paid minus outstanding at the beginning, add outstanding at the end. Then coming to the expenses of the management here, so this will be taken under schedule number 4, that is operating expenses. Then we have rent of staff quarters deducted from the salaries. So here rent of the staff, see, usually in some organizations provides what, the quarters to the staff, and whenever they're providing quarters to the staff, they usually charge what, the rent. So that rent, instead of taking directly from the employees, okay, they are making it as an adjustment against their salaries. Okay, so here whatever they do, but it is a part of the rent amount. So this part of the rent should be taken under what, other income. So show this under other income. Okay, then followed by we have the premiums which is being received. So premiums received will be taken under schedule number 1, and followed by the premium on reinsurance accepted is to be added. Okay, and the reinsurance premium paid is nothing but it is ceded, so therefore this is to be deducted. Okay, and there is a refund of the double taxation. So refund, so in refund, in the sense what, the taxation is to, I mean, we are receiving the amount of the tax which has already been paid in excess from the income tax authorities. So this becomes a part of the income, because when you pay the tax, you show it as an expenses. When you receive it back, you can show it as a income. Like bad debts is a loss, recovered is always a gain. So similarly here, taxation paid will become an expenses, refund will become a income. So the refund of the double taxation will be taken under other income, right? Then we have the interest and the dividends, which is gross here. So show this under the income from the investments, and ignore the given amount of the income tax, because already there is a gross income which is being provided. Okay, then we have the provision for the unexpired risk made in the last year, 10 lakhs of rupees, followed by an additional reserve of 50,000. So therefore, the total reserve which is standing at the beginning of the year towards the unexpired risk is 10 lakhs 50,000, which is old. Okay. Then the medical expenses regarding the claims should be added to the claims itself under schedule number 2. Then followed by the loss on sale of the vehicle will be taken under the operating expenses, because vehicle is an asset and any loss on that will be considered under operating expenses. The next here we have the legal expenses regarding the claims. So as you have seen, medical expenses regarding the claims, similarly we also have the legal expenses regarding the claims. So whether it is medical or whether it is legal, if it is regarding the claims, then we are supposed to add that part of the expenses to the claims itself. Okay, so add medical expenses as well as add legal expenses. Then we have the commission, followed by there is a commission on the reinsurance ceded to be deducted from the above commission, and commission on reinsurance accepted to be added to the above commission, right? Then we have reinsurance recoveries of the claims, as you have just seen in the previous question, where it has been simply given as reinsurance recoveries. So whenever they say reinsurance recoveries, it is always with regard to the claims itself. So minus it from the claims. Then next, advertisements to be taken under operating expenses. Then profit on sale of investments to be shown under income from investments, or otherwise you can just show it separately under schedule number 1 itself, that is immediately after income from investments. Then depreciation on the furniture to be taken as an operating expense, right? So further he says you are required to provide a reserve of 50% on the net premium for the unexpired risk, as well as an additional reserve of so there is some information which is not given. Okay, thank God it is there. So the additional reserve of 1% of the net premium in addition again to the opening balance. So very clearly he said the additional provision for the unexpired risk is 50,000, which is opening, that is the last year. So in addition to this 50,000, whatever you are going to calculate, 1% of the net premium is to be added. Then that becomes your closing additional reserve. Okay, so then you are going to make a comparison of what is old and what is new. If the old is more, okay, we are going to add back the difference amount. If the new is more, we are going to minus the difference amount from the net premium. Okay, I hope you will be able to complete these questions by yourself, because the more you practice, the more perfect you become. And this is going to be, one unit, right? The general insurance accounts is one unit itself, where two questions are to be expected from this. So better practice and gain more marks. Okay. So just so thank you very much, children.